morning. I'm glad to see that we have a crowd that's totally devoted to copper, lead, zinc. It was getting pretty thin there for a while. So projects, flagship projects for Osisko Metals are Point and Gaspe Copper, two iconic brownfield sites. Point produced for 25 years, closed down in '88, and Gaspe Copper produced for over 45 years, and that closed down in '98. So we're big fans at Osisko of taking brownfield sites, bringing in new ideas, new concepts, and advancing development on what is often significant resources. In the case of Point, so far we've outlined mostly in inferred category over 8 billion pounds lead zinc in the ground. And in the case of Gaspe Copper, which we hope to close with Glencore this year. In fact, in the next month, we should be able to close the deal to acquire 100% of Gaspe Copper. We've got looking at about 3 billion pounds of copper open pit in the ground. Few words on our view on base metal long-term demand. I'd like to show this slide. This was published by Glencore a couple of years ago, but I think it still stands. Bottom line, if we hope to reach 2050 net zero emission and reducing our carbon footprint, the direct impact on copper, nickel, cobalt, and zinc in the next 30 years is extremely dramatic. We'll have to double our copper production. We'll have to double the zinc production, and if lithium battery technology does not change significantly, we're looking to almost quadrupling nickel and cobalt demand. Bottom line, as the state today, these are pretty much unattainable objectives. I quote Woodmac from last fall, especially in the copper space, unattainable gap between projected demand for decarbonization and current mine supply and projected mine supply. It's a big problem, and if it's not resolved, we simply will not reach the goal of 2050 net zero emissions. And the case for copper, simple example, discovery drought. This was published last week by SME. You look at discovery records since about 10 years ago, it's just dropped like a rock despite significant spending in exploration. That's due to many factors. Big deposits are becoming harder and harder to find. Jurisdictional risk and also permitting issues. There are significant, even here in North America, there are significant world-class deposits that are still not permitted. I cite Resolution in Arizona, Pebble in Alaska, they're basically on hold. And so it's not just a question of a discovery drought, it's also a question of putting world-class assets that are sitting under our feet into production and avoiding permitting quagmires. So these are two main factors, and same arguments could be made for zinc. These are two main factors that are contributing to supply crunch globally, but especially in North America. So back to Point, sitting on the South Shore of Great Slave Lake, they produced till '88. It was a Cominco, one of the major producers for Cominco back in this time. We reacquired the property in 2018. Infrastructure is still in place, which is key for any base metal development project. We're 60 kilometers away from Hay River, which has a rail line all the way down to Edmonton, and then you're on the CN main line to export the concentrate anywhere in the country. So we've got power on site. Substation that once fed the original Point mine is still there. Needs an upgrade, but we're working with the NWT Power Corporation to get that done. And so and then there's over 25 kilometers of haul roads between the pits. So in its day, it was essentially a string of open pit operations that fed a central mill located here, and we envisage doing the same thing as well. As most of you may know, we really signed a joint venture agreement with Appian Natural Resource Fund out of London, $100 million injection into the Point project, 75 which will go to fund the project to FID, or final investment decision, essentially shovel ready, and $25 million injection into Osisko Metals. So for all intents and purposes right now, we have a free carried with cash injection into Osisko to FID over the next 3 to 4 year period. And the project is fully financed. So that was well received by the market, and we hit the ground running. We should be able to close this deal in the next 3 weeks and move directly into completing drill program to convert the resource to measured and indicated and launch the feasibility this year. As it stands, we have 15.8 million tons open pit at about close to 6% in the inferred category, and 47 million tons, sorry, in the measured and indicated, inferred category, 47 million tons, again, close to 6% lead zinc. So most of this would be open pit, but also some shallow ramp underground mining. Our 222 PEA gave us $600 million Canadian NPV after tax, with 25% after tax IRR, based on long-term zinc of $1.37 US, which we believe is conservative. As it stands, Pine Point has the potential to become, in the next 4 to 6 years, a top 10 global zinc mine. And also I'll show you in a moment, it's exceptional to the extent that it'll produce one of the world's cleanest zinc concentrates. And to make that point, this is comparing Pine Point to both for major elements and trace elements. This is our own work in terms of concentrate chemistry, compared to the 5 biggest zinc producers in the world. So that includes Red Dog, Rampura, Mount Isa, McArthur River, and Antamina. And as you can see, for both major elements and trace elements, Pine Point is just outstandingly clean. So what does that mean? It means that no smelter is going to want it all, because smelters make money with penalties, but smelters also have environmental and technical constraints on how much deleterious elements they can take into the con. So there's a huge market across the globe for clean concentrate. So the bottom line is most of the smelters in the world are going to want some of it. So this opens up the market, a very wide market for Pine Point concentrate. We currently have within 3 indigenous communities exploration and collaboration agreements, and as we move towards feasibility, we've agreed to negotiate IBAs with all groups, and that should start this year as well. So bottom line, if you include a critical mass of at least 5 billion pounds of metal in the ground, case of Pine Point, 5 billion pounds lead zinc, ready infrastructure in place, including rail to markets, and quality of concentrate, Pine Point is the only project in North America that fits all 3 criteria. Next, I'll move on to Gaspe Copper. This is a deal we have for 100% acquisition with Glencore Canada. Again, we hope to close in the next month or so. The last factor to get through right here is just Quebec government approval for transfer of the mining rights. Located in the Gaspe Peninsula of Quebec, it's a past producer with a paved access road to a deepwater port in Gaspe. Gaspe produced for over 46 years, 52 to 98, approximately 140 million tons of 0.9. Both from open pit and underground operation. It was originally a Noranda operation, quite spectacular in its time. It was actually the biggest underground mine in Canada, room and pillar mostly, with spectacular pillars up to 40 meters in height. As it stands today, the entire site has been remediated. The smelter and mill complex have been taken down. The only thing left are administrative buildings. Our immediate plan is simply an expansion of the Mount Copper open pit. There's significant resources left on site. And we initiated a drill program last fall to convert our current inferred resource to measured indicated. So the resource stands right now at 456 million tons of 0.31 sulfide copper, strip ratio of just under 2 at 1.9. So about 3 billion pounds of 1.4 million tons copper metal in the ground. This is entirely, however, from historical drilling from the Randa days, and 43-101, of course, does not allow you to quote, measure and indicate it from historical work, which is why we initiated the drill program. It's a 30 to 40,000 meter program. We'll be drilling again starting again next summer. Geology is quite simple. It's a Middle Devonian carbonate sequence with the Porphyry Mountain system centered on a porphyry plug. Most of the underground production came from stratabound skarn horizons, which produced higher grade material. Total production from underground operation in skarn was about 70 million tons at 1.5% copper. Small production from the original Mount Copper open pit, about 70 million tons at 0.37. There are currently about 30 million tons of oxide material at 0.35, which we don't know if we would process. And I'll get back to it in a minute, but when I worked at Gaspe Copper in the 90s, we discovered Porphyry Mountain. It's a very significant second porphyry system at depth, about a kilometer down, just to the northeast of Copper Mountain. And I'll give you details on that in a minute. So our current resource at 0.16 copper cutoff gives us 456 million tons. 0.35 total copper. We assumed about 0.04 of that as oxide, so 0.31. With the current work we're doing right now, we expect the final grade will be around 0.33, giving us over 3 billion pounds or 1.4 million tons copper metal as a resource. With the current drill program, we're confident that pretty much all of that is going to be converted to measured and indicated with a slight increase in grade. We're also going to evaluate the moly content as a possible byproduct. And there will be a silver credit recuperable in the concentrate. Here's the model for the current pit. So this is based all on historical data. The original Copper Mountain pit here. This is the pit that we envisaged, a total depth of about 600 meters, hitting at the bottom of the pit and the C-zone skarn, and the strip ratio about 1.9. We recently reported a directional hole that we drilled last summer to undercut just underneath the original pit, the core zone of mineralization. Total hole from top to bottom hit about 1,000 meters of 0.46, with the core zone here over 300 meters at 0.78. So that was better grade actually than we anticipated. But this is key to the development of this project. Initial production for the first 3 years is essentially going to mine the higher grade core with a lower strip ratio and faster payback on the CapEx. Back to Porphyry Mountain, again located at depth just to the northeast of Copper Mountain. Not very much drilling, but the intersections since the Randa days are quite impressive. In fact, the last hole to be drilled here was by Xstrata in 2012, hit over 822 meters, starting at a depth of about 1,000 meters of 0.94 copper and 0.07 moly. So that's over 1% copper equivalent over well over 800 meters. So we're strongly motivated to fully drill this deposit and outline an inferred resource, hopefully by 2024. Obviously, it's deep, so the only potential for production eventually at Porphyry Mountain would probably be assisted block caving operation. And this would only take place once we put Mount Copper operation Mount Copper into production. So the deal with Glencore is very simple, $25 million US acquisitions through issuance of a convertible note in Osisko shares at 40 cents a piece, including a half warrant, and eventually a milestone payment of $20 million US once we reach commercial production. We're committed to spending $55 million in the next 4 years to get the project to FID. Glencore will keep a 1% royalty on Mount Copper, and of course, Glencore gets 100% of the concentrate. We've already negotiated the offtake agreement. So we hope to close this in the next month or so, in which case then we'll have 100% interest in Gaspe Copper, with the only encumbrance being the 1% royalty. So key takeaways as we shift towards a green, sustainable economy and coupled with post-COVID infrastructure stimulus, we're very bullish on base metals, especially copper and zinc, nickel. And we see a dramatic increase in global base metal demands over the next 2 decades. We also see production deficits looming. Copper, also for zinc. Zinc, I think, in North America is particularly sensitive because all we can look forward to in the next few years are mine closures with nothing coming online. And to quote Wood Mackenzie from last fall, there's almost an unattainable gap between green energy demand for copper and mining supply, and ditto for zinc. So we're very well positioned as a company to capitalize on a rapidly evolving market with exposure to both significant zinc and copper assets. And we strongly believe Pine Point has potential to become one of Canada's outstanding lead zinc mines, producing a premium concentrate. Right now, our market cap is sitting around 80 million. We expect re-rating as Pine Point moves ahead. Again, we have a free carried. My personal opinion is that by the time we get that idea of Pine Point, we should see an NPV after tax of well over $1 billion, driven mostly by increasing zinc prices. So at 40% of 1 billion, that's significant higher rating than we have now. And that is giving zero value to Gaspe Copper. But fair enough, we don't own Gaspe Copper, but as we close the Gaspe Copper deal, again in the next month, we also expect to see a re-rating on the share price. Thank you very much.